Let's analyze together for the long-term Levi Strauss. We have actually earnings today, so it's very interesting to analyze it right now. Read the disclaimer right here in the video description below. What we have here is we have data from 2019 till today. It's very importantly from the technical analysis perspective, we are actually trading lower. We are in this support level. I would say this is like mega support level right here. And then we have the net income as well. I'm gonna load it right here so you can see below. And the important thing is like the price tends to follow the net income. So the better the net income, the better the price action, you know, in terms of going up and so on and so forth. In this case, you can clearly see right here we have positive surprise factors every time, which is good. But at the end of the day, look at that. You know, the problematic thing with this one is they enter into negative territory right here in May 2023. Very weak earnings in a couple of quarters. And the decline, you know, the problematic thing is that it's like when it goes out the net income, the price it tends to skyrocket even in a huge manner. But when the net income tends to go down a little bit worse than before, the price drops. So in this case, look at that. It's like we had a net income in February 2022 and 195 million, and the next one 49, the next one 172, 150. Look at that, you know, and the price dropping every time. And look at that, minus 1.6. It's like it's exactly the same as the price action is trading at the minimum levels, you know, like the worst result ever, minimum levels trading as well. But here it's a different story. We had another negative net income right here in February 2024, minus 10 million, which is a bad one obviously. But here this is very interesting, 182 million of positive net income. So this is promising, but obviously this is the past. In order to study the future, which is the most important factor to assess if it's a good buy or not, and this is when things are very interesting. So we go to the forecast because we have 12 analysts from Wall Street. So this is cyclical, and this industry is kind of particular in the sense we have better quarters and worse quarters. Normally the best one is the fourth and the third. The worst quarters are the second and the first. So the thing here is like it's better to assess the annual EPS in order to assess the growth. In that sense, it's very interesting because for the long term, Levi's is gonna continue to grow. Look at that, the estimate by 2027, 1.50. Probably the problematic thing, another thing that I see is like that's actually exactly the same results as the ones seen back in 2022. So it's not that promising, right? I mean, you see something very promising would be like the stock having an estimate of in the EPS of 2 or 250 by that year. But this is like getting the similar numbers as before, which is not very promising. But obviously, it's better than 2023 and 2024, which is good. So in 2025, which is the current year, is not going to be much of a difference. It's going to be very similar results. So according to the fundamentals, it should be trading sideways, at least for this year. And maybe in the next year, in 2026, it's going to be a little bit better. It wouldn't go to those levels established back in 2022. But at least it will be trading something around 20. And by 2027, it should be trading around, let's actually draw it. According to the forecast, this is what it should happen, you know? Like by 2027, it should be trading around 20, to the levels established back in 2021, like the best results ever, because according to this we're gonna get similar results, and they're close to it, because you go to the forecast and you see the reporting and the estimates, they are very similar in that sense. So actually the reports are even better, so that's a very positive thing, you know, like when you have like a positive surprise factor, it tends to go even it tends to go up even more, so which is good. So that's the thing. Right now it's gonna be trading sideways, probably, maybe. Right now the market is crashing. It's not helping also. But right now we have to wait and see how this crisis is gonna impact the business. It's not very positive, I'm gonna say, because this industry in particular, it could be very, very affected by the Trump's decision of imposing tariffs. So if they don't reach an agreement, it's gonna be complicated. And look at that, you know, in August 2023, nothing of this happened, and it was trading at $12, which is the very similar level we're trading right now. That's the thing that's not promising. So we have to wait and see how this evolves. And if we see, if for instance, if we're gonna have US tariffs for the long term, it's gonna be very complicated for Levis. I can tell it's gonna enter into negative territory, to the not maybe not to the one seen back in May 2020, but negative territory for sure. Minus 100, minus 150 net income in one quarter, which is critical. So that would mean the stock going below $12. But it shouldn't get so much ugly in that sense. At the end of the day, this has a market cap of like let's see, just 5 billion. So it's not very demanded. It's like there is no so much bearish pressure in anymore because we are trading already low. And it's a business that maybe it's gonna suffer a couple of quarters, 3 or 4 quarters because of that US tariffs, but that's it. They would add into profits again at the end of the day. But we had to be patient with this one. We're gonna see the results today. The estimate is 0.27. In comparison to the previous one, is gonna be real bad in that sense, but it's gonna be positive. It's gonna be positive. So similar results. It's like I would say something around 30-40 million of positive net income. It's not super good, but it's not super bad either. So we had to be patient for the long term. Obviously, it's very complicated situation for Levi's right now because of the US tariffs. We had to wait and see. But obviously, if something changes right there, the prediction it could change that as well. So thank you very much. See you in the next one. Remember to read this disclaimer again and subscribe to Technicity to watch more content like this.